I think the only way for a sustainable path of yuan strength is a path to growth for China. I think that in the same way that they're trying to control the decline in equity markets, they're trying to encourage capital inflows, and that's all great. It's all great that they're trying to use their reserve pool to stabilize their currency. But historically, growth has been a huge driver of the CNY, and there's key mechanisms. The fact that low growth implies low rates, implies negative carry. It matters both for domestic players of the CNY as well as foreign players of the CNY, and that is a bigger determinant than balance of payments or capital flows altogether. So you need growth.
So is there anything else the PBoC can do? Are there any other tools in its toolbox, or is it going to be up to other authorities in China? For example, the market changes that we saw over the weekend, the halving of the trading stamp duty to try to spur those inflows, just like you said, into stock markets, for example.
I think your question is multi-layered. I think that obviously they have a lot, particularly in times of surpluses, they have a lot of capacity to stabilize the currency, but historically they haven't changed through their reserves the trend in the currency, right? It's periods where they lean against speculation, they lean against the market, and then off it goes again. I think that the fundamental question for capital inflows is two things. First of all, an opportunity for growth, as we said earlier, so policies that encourage growth. The other thing, obviously, is the fact that a number of policies the last 2 to 3 years have been meant to control key industries, and that has led to a negative sentiment on Chinese assets. I think some sense that these industries can thrive again could be a bigger driver of capital inflows longer term than stamp duty.
Where do you see the currency going over the near to medium term? How low could we ultimately go versus the dollar? Or have we seen the lows already?
It's hard to say that one can draw a line in the sand and say that these are the lows. Everyone is a bit confused on whether what they're announcing now is the ultimate set of measures or whether it's a precursor to other things. I think it's important for investors to be somewhat open-minded to the fact that this could be signals before some bigger growth initiatives. But if those don't happen, then I don't think that this is necessarily...
It's so interesting you say that, because all of the commentary, the sort of analytical commentary around these various measures that have been put forth is that it's a really piecemeal approach, and what the Chinese authorities have done so far just isn't enough to counter the downturn that's happening, especially in the property market. Is there any reason to believe at this stage, do you think, that there is a big package coming?
Well, it's hard to read what is in their minds, obviously. Their proclamations, the recent statements from the Politburo, are a lot more pro-growth, let's just say a lot more promising than they have been before. So one needs to keep an open mind, but the realization of those proclamations so far, as you say, it has been piecemeal at best.